Listen, today was wild. I locked in $4,300 with just 2 trades, but here's the thing though, it wasn't luck, it wasn't guessing, it was a systematic approach. This systematic approach that I have been able to refine over and over again over a long period of time, man. I've been trading since 2018. It's pretty much forever now. And the strategy that I use today, it's pretty much broken into, like you can say, a price section. But I want to break down this strategy into multiple different parts. I'm going to walk you through this again. I've spoken about this multiple times on the Discord. And the strategy that I use today, it's the one that I've broken down plenty of times. This is called price section based structural trading. I'm going to walk you through this again, this time with even more clarity. Before we go any further, I need you to understand something. This might be one of the most valuable videos that you ever watch in your trading career. My main focus in this breakdown is super simple. I'm going to explain how I entered the trade, how I added to my position, how I take profits, you know how my winners are always big and my losers are always small, how am I able to do that, what key price action actually confirmed the setup, and what is the exact step-by-step logic behind the strategy. There's not going to be any fluff, there's not going to be any confusion after this video, it's just pure breakdown. Let's jump straight to my charts. The 2 trades that I took is one on Nvidia and second one on AMD, but both of these are called sister stocks. The reason why they're called sister stocks is because Nvidia is a $5 trillion company. 5 trillion, 5,000 billion. That's more GDP of like a lot of freaking countries. I think there's like 4th, if it has to be GDP wise, in the world. That's insane, right? It's such a big company at this stage. It's pretty much like a, you can consider it like SPY QQQs. It comes in the same window. And then comes your AMD. AMD moves when Nvidia moves, just as simple, because semiconductors, it's just so freaking big now. Everything is semiconductors, everything is AI, everything is just like the way, this is how everything works at this stage, right? So 2 trades. They started selling off. I was like, bro, this looks way too easy, because once these names start selling off, the momentum increases to a point where it's just insane. The one key factor that you always need to pay attention to is called time frames. I use 2-minute chart for first 30 minutes. Then I use 5-minute chart from 10 o'clock Eastern time to 11 o'clock Eastern time. And then I use 10-minute chart for the rest of the day after 11 o'clock Eastern time. So I was on a 2-minute chart. Okay, that thing is clear. Second thing that you always need to mark on is called pre-market zones. So you have pre-market highs or pre-market lows. Once you have the pre-market zones marked on your charts, this is where the game gets a little bit interesting. The reason why I say the game gets interesting is the moment a stock can break out of the pre-market low, then comes your levels. You draw levels on an hourly chart before the market open, you see which levels are breaking. Now the game plan is to look for some sort of a flag, a little pullback. Essentially the change of hands is what we're looking at. Change of hands, what does that mean? That means if a lot of people have already sold here, they're going to take some profits. Selling means pretty much you can make money when the stocks go down. All right, I don't know if you know that. You can make money when the stocks are going down. When the stocks are moving toward the downside, they move down really, really quick. There's a saying that says stocks go up using the stairs, they come down using the elevator. It's just insane. So that means when it moves down quicker. Now we have drawn our levels. Everything is good. People who shorted at the top, they pretty much, now if you have sold your friend an iPhone, and you sold the iPhone for, let's say, $800, now you need to buy an iPhone, but you don't have an iPhone, but you need to go and buy an iPhone. So let's say you bought an iPhone for $600 and you give him the phone, you pretty much keep the difference. You understand what I'm saying? So essentially you sell something first and then you go buy it, you keep the difference. That's how people make money when selling the stock shares as well. They sell something at the top. Now, in order for them to get out of this position, they're going to buy it at the bottom. Like you bought this phone for $600. So when they buy it, when a lot of people start buying, it changes some hands. When it changes some hands, essentially it kind of makes a little beautiful flag. You want to keep an eye on this flag and then take the trade. But then comes, this is like the entry structures. And let's go on Nvidia's chart today and we will have a look what happened right at the market open. We're on a 2-minute chart. Nvidia was my first trade that I took on the day. It's just absolutely beautiful. Why? Because we're sitting close to pre-market low. We're sitting... Yesterday's low has already broken. We broke below the pre-market low like it's nothing. How freaking beautiful is that? We broke below pre-market low like it's nothing. Then it went down, broke all my critical levels that I'm watching. These are my hourly levels that I've got from the hourly chart. I'm paying attention to this. I'm like, this looks absolutely sick. I just want some sort of profit taking. Some sort of profit taking on a 2-minute chart will simply mean a little pullback to a level, a little pullback to just like Fibonacci points. Fibonacci, I'll show you what Fibonacci means as well. Fibonacci is just mathematical numbers, pretty much. You draw Fibonacci from the market open to wherever it starts bouncing. We do not know where it's going to start bouncing. So you wait for the market to do a little bit bounce. Boom. It bounced right here. You see this? It bounced right here. Now the 2 most important levels that we always have for the Fibonacci's is always going to be these 2 levels. These are the settings. You should have settings exactly like this if you like trading price action. People say 0.618 is a golden ratio. Bro, by the time it hits 0.618, it's too far gone. Don't worry about it. 0.236 and 0.382 are the most important levels. So the moment it bounces, hits the 0.236 or 0.382 for now. It already bounced and hit the 0.236. Now it's gone to the next level. It shouldn't touch 0.5. If it touches 0.5, man, it's pretty much start looking crappy. Now think about this. It is looking like this. It has touched 0.382, hasn't touched 0.5. Everything is looking nice and clearly tells us that some sort of profit taking has started happening, and it's getting rejected over and over again at 0.382. There's also an hourly level that I have right there, 179.2. Now you tell me, what does it look like? Broke below, started bouncing, getting rejected of this little zone that we have created now. This zone comes from an hourly level and the Fibonacci level. This zone becomes a sexy entry towards the downside. Exactly what I did. I entered for the puts right here. I mean, you need to understand the reasoning behind this. Entered, you can add to the position size when it breaks the flag. Absolutely beautiful. It hit the first profit target. It had a little bit of a bounce, but that's fine. I didn't take any profits because it was very, very quick. But I'm going to break down how I added, because I added to this position. I used this particular little flag structure that was started forming right here. As you can see right here, we started little 2 touches. I used this to add, and then it made a nice move towards the downside. Absolutely beautiful. You understand what I'm saying? Now, how do you take profits on this though, Samesh? Okay, so from your entry point to the next level, this is how you should always base this off. I'm going to use an example of, let's say we have Make Life Easy. Let's say we do 10 contracts. You do 10 puts. Each contract, this is called, literally, you need to pay attention to this, negative risk management. People worry about risk management. You need to worry about negative risk management. Negative risk management simply means once a trade pays you, it should never take any money away from you ever. That means if you did 10 contracts, let's say, at the first profit target, you're going to take 5 off. Let's say you entered at 1.20. That means $120 a contract. The contracts are 1.50 here. Okay. So what you're going to do, you're going to take 5 contracts off, because you won 10 contracts. You're going to take 5 contracts off, $30 a contract, 30 times 5. That's $150 already booked. That's in your pocket. You're still holding 5. Now you're holding 5. At the next level, you're going to take another 50% off. Now you can't take 2.5 contracts. So you always go a little bit bigger. That means at this level, you're going to take 3 contracts off. By the time the prices reaches here, let's say if the prices are sitting at 190, that means you have $70 in profit. You're going to take 3 contracts off, 70 times 3, that's $210. At the next level, now you're holding 2 contracts, right? The next level, you're going to take 1 off. And let's say if that price is sitting at 2.8, let's say, now you're up $160 on a contract. That's 160 times 1 is 160, right? And what happens if the stock reverses after touching here? Whatever you have holding, like let's say you got out 8, you're still holding 2, your stop loss is your entry price. Entry price on the options. Bro, you never ever lose in this. You won't lose your own money. You will lose a profit on those 2 contracts. But look at this. This is how it went. I made a move down. Look at this. How freaking beautiful. You take some off. You booked the gains. Now think about this. Out of a $1,200 position size that you did, this is $1,200 position size. You've already booked 210 plus 150. Whatever the numbers are, right? And let's see if it goes down even further. Boom, hit your profit target right at the bottom. And that's where you're going to take 1 more off. Then if it bounced, the stop loss is break even of the option contract. And then it bounced, the break even got hit. Now this is called negative risk management. Once it starts paying you, you never want to have the trade go against you. You understand what I'm saying? So when you look at AMD setup, AMD kind of looks like this as well. Same thing, exactly same thing. What happened? We'll draw Fibonacci's. So we have Fibonacci's from the highest point of the day to where they started bouncing. It started getting rejected of 0.382 and the VWAP. So I decided to buy puts, added the puts roughly, made a big move towards the downside. And next hourly levels, next levels that we had, we kept taking profits, and we also took profits from my own indicator that I have built. It's just absolutely beautiful. Both of these trades were 50% profit. 50% profit, you know what that means? That means, let's say if you had both of them were 50% profit. Let's say for both the trades you did $1,000 position size. You made $500 on AMD, $500 on NVIDIA. That means you up $1,000 on a $2,000 position size total. Absolutely beautiful. Let's say not 1,000, maybe 800 after all the slippage and everything. But absolutely beautiful. How freaking nice. You understand what I'm saying? So now how I add it to my position size is clear. I add every single time. It kind of makes a little flag pattern or something. And then comes what key price action actually confirmed the setup for me. QQQs confirmed the setup because QQQs at the same time was weak, while NVIDIA, and you have NVIDIA moving towards the downside. You have AMD moving towards the downside. What's QQQs now? QQQs is a bunch of all the tech companies put together. But Then comes, why did I exit at the bottom though? I exited all my trades at the bottom because QQQs had a 200 simple moving average on an hourly chart sitting right there. I always watch 200 moving average on an hourly chart sitting right there. Like, check this level, 617.8. Do you want to see where the level was? You'll be like, bro, this don't make sense. Hang on, I'll show you. Every single day I send my levels in the morning. Check this, 617.81. I said this is where the prices can bounce. Do you know where the prices bounce? Because there was 200 moving average sitting right there. So when 200 moving average on an hourly chart hits, I'm out. I've taken some off, bro. No, I'm not one of those guys where I use the key price actions to confirm my thesis, to confirm my setups, and to take profits. The exact step-by-step logic behind the strategy is super simple. Your goal as a day trader is not to time the top or time the bottom. That means if a train leaves at a station A where the trend starts, your goal is not to catch from station A. And let's say if the train starts at station A, goes to station D, for example, a train starts at station A, goes to station D, your goal is not to catch the tops and catch the bottoms. No, people think that's your goal. No, you are not a psychic, you're a trader. Your goal is to let the trend form, then wait for the entry. Your goal is to jump in the middle and jump out at the middle. If you keep doing this, you don't have to try to see where the prices will reverse. You will always, your entries will never be perfect. Your exits will never be perfect. You need to just jump in the middle, jump out. If you try to keep trying to do A to D, bro, you know what happens? The D goes up your A. Hey, that's what happens. You're going to get cooked. You understand what I'm saying? Like, cooked hard, bro. Like, no mercy there. Stock market doesn't do no mercy. And these were the absolutely beautiful setups that I took. I just wanted to get on here and break these down because I understand the importance of understanding the price actions and the theory behind the price action, because you'll be able to take the trades a little bit more with confidence once you understand why these trades were actually trades at the first stage. You understand what I'm saying? Also, you'll be surprised, I took these setups with my students in the real time. I'll just play a little video here. I mean, just check this video out, right? One thing that I'll tell you guys, we all eat like a family. We got this AMD trade towards the downside and NVIDIA trade towards the downside. They're both sitting at like 40-ish%. If you guys took this place, a family in the chat. We all eating like a family in here, my brother. Come on. That's it. Hey, yeah. Oh my goodness, look at that 177. Feel free to take a little bit more profits on this. Because we were trading live and they could watch my screen in the real time while I'm executing the stuff. So they have confidence as well to execute. And when you have confidence, bro, everything changes. So come watch my screen in the real time while I'm executing. Check the first link in the description box below and I'll teach you in the real time why I'm taking the trades. So it gets a little bit more easier. All right. If you like the video, let me know in the comments. I hope you enjoy this. I'm out of here. Peace.